Hello and welcome, ladies and gentlemen. Welcome to Nirmal Daria. We have with us Kunal Shah, head commodities research at Nirmal Bang, joining in. Kunal, overall, if you go to see OPEC, Russia, and the others, did actually agree on Saturday as well to extend cuts of almost around 9.7 million barrels per day, and this is until the end of July. Now, taking this into consideration, what's the sense that you have for 2020 oil price? Because again, the anticipation is that if this continues, there is a possibility that we could be moving into a deficit in the month of July.
Okay, so first about your question is on from the long-term perspective. So right now we have a production cut till the month of July. So that is June and July. For 2 months, the production cut of 10 million barrels, 9.7, that roughly equals to 10 million barrels of going to stay in the market. So considering that the moment this production cut is over, okay, and again producers are started to produce to pre-COVID crisis levels, I think oil markets is going to be flooded with huge surplus. So if you take for right now, Brent at $45, WTI at $40 is absolutely perfect shot for 2 months down the line. 2 months down the line, you will see these prices hovering somewhere between $30 to $25 for WTI and $30 to $35 for Brent, and that too conservatively. So we can expect more downside then. But right now, my view is that from long-term perspective, the fundamentals of oil remain bleak, and I don't expect any meaningful recovery in the oil prices going forward by the end of the year.
Right. And what's the sense that you pick up on the production cuts? Because uh, again, the OPEC Plus meeting included positive news for all the oil bulls, but it actually came out and said as well that it would actually crack a whip, crack down on countries who are actually not complying with production cuts and force them to make up for, commitments that they haven't kept. What does this statement actually tell us?
It is a statement. Generally, what happens when this kind of humongous production cut is started by the OPEC, all the members has to comply to what they have committed. So generally, what happens that somebody starts producing 500,000 barrel more than what they are supposed to. So the compliance generally doesn't is generally not met in the long term. So in the short term, everyone wants the prices to go up, so everyone cuts the production. But in the longer run, the compliance is never met in such kind of huge deal. So that's why OPEC is making sure that all the members, they should comply to what OPEC has been saying. But I don't think so. It doesn't matter much because this production cut is for the next 2 months only. So we are
Mm.
not going to see a 9.7 million barrel production cut for the rest of the year. So I don't think so. It is material right now, and I believe that this production cut is going to eventually wane in the month of July. So when it goes, I think then prices will go down. And today there has been an event from in fact from yesterday, Libya has started the production of 4 lakh barrels,
Mm.
and there has been a force majeure in Al Sahara facility. So I think the higher production indication by Libya is also slightly weighing on crude oil futures. So I'm not very bullish and not very optimistic from the long term perspective on oil.
Right. So are we saying that there is a possibility that there would be no production cut extended at least in the month of August? Or do you think there is a fair chance where the production cuts could be extended in the month of August as well?
Yeah, it depends on what is happening with the COVID-19 crisis. So whether after the lockdown is now, most of the countries are almost done with the lockdown. My personal understanding is that we will not have another lockdown, even
Mm.
if there are spurt in cases. But if there is again lockdown for 1 month, 2 months,
Mm.
like we saw earlier, then I think that that's not a good news for oil producers. So my view is that there should not be a lockdown. That's why I'm able to say that this production cut will not extend beyond July, because all these producers are losing a big chunk on the volume. So
Mm.
right now, they 10 million barrels of production cut means 10 million per and $40, $35 right now it is trading. So the loss actually OPEC members are facing is quite huge. So just in order to prop up the prices, they have to do it. So I don't think so. This kind of artificial production cut can, push the prices on the longer term.
Right. On this point, Kunal, oil companies actually don't make a lot of money at $40. Uh, but do you think for the sector to truly rebound, what is the price that it needs to eclipse around, or at least hold on to that minimum price? What is
So
the
if
desirable price?
Yeah, so if WTI crude oil remains above $45, then production will again starts to move up. But right now, we've already seen US oil production has dropped down by almost 1 to 1.25 million barrels per day. So I don't think so that this price is not enough for them for restarting the production because the cost of production for most of the shale oil is somewhere at $40. So this price is not viable for restarting the production.
Right. And on the demand side as well, uh, do you think improving air travel and the driving traffic, these two could be the major components that we need to watch out for?
Yeah, these are the main key drivers of crude oil, especially petrol and diesel, what we say gasoline, and distillates, that is diesel. These are the two main
Hmm.
source of demand. But now going forward, in next 2 to 3 months, we are not going to see the air traffic or the road traffic the way
Correct.
we used to see in the month of February or January across the world. So even if in India there is relaxation coming, people are coming out, but the fact remains is that it's not going to be like it used to be. So
Hmm.
still a lot of people are working from home. Still a lot of people are really afraid whether they should go out or not. So I don't think so that oil demand is going to reach anywhere closer to what we saw in the month of January or February. So
Hmm.
I think the loss of demand of more than 10 million barrels should last more than 6 months. So if I count it from the month of March, April, May, June, July, August, till August, there is no chance of reaching back to the pre-COVID levels when it comes to the oil demand. Not possible.
Right. And are you of the opinion that the market has probably formed a short-term top right now?
Difficult to say because of production cut is going on and lockdown is being lifted up. It can go up, but I don't think so. It will hold on to these levels because eventually the production is going to restart once the prices go up. So I don't. I'm not saying it is the top, but we are 3 4 maximum 3 4% upside can come. Not more than that.
Right. So what would your strategy recommendation be?
So yeah, we have been recommending around 2900, 2880, but unfortunately crude oil is continuously going down right now. As of now, when we are talking, it is edging, sliding down. So my view is that one should sell the rallies. Already it is down, so 2860, 2880. These are the levels to go short. 2790, 2780 levels to book the profits. And if you ask me, the stop loss 2940 should be the stop loss for the same strategy. And somebody wants to keep a deep stop loss for holding it positionally, I think it should not go above 3100.
Right. And moving away from crude, Kunal, what's the sense that you've been picking up right now in terms of gold? Because again, with the way what's happening with the markets, we are seeing some bit of selling pressure that is coming in terms of gold as well. Now, lockdowns and uncertainty is actually something which actually helped prop up, prices in terms of gold. You had, even silver that, was trying to do the catch-up rally. But now that economies have started to open up, is that one of the reasons why gold prices are coming down? And if they do, where do you see the bottom in the short term?
So yes, gold prices came down mainly on Friday when the
Hmm.
US job data came, and that indicated that the job market is still better. It's not getting that worse the way most of the economists have been predicting. There have been report that there is a calculation error, but there is no acknowledgement by the Federal Reserve or by the any US government committee that there is a mistake in counting the numbers. But I believe that longer run outlook continues to remain bright. And in short term, the factors like today, the FOMC meeting will start. So what is going to happen to be the outcome tomorrow. That is something, which is going to be helpful. Whether this long term, this stimulus package, whether it is going to continue, whether the interest rates are going to go down or they are going to remain stagnant or are going to go negative. All these clues we will get from the Fed meeting, and I think it can lead to some bit of upside in gold for August contract. So August contract, which is trading at 26,300, it can test levels of 46,300. It can test levels of 46,850 to 900 during evening session. Those are the levels one should book the profits. Not expecting any major upside from that levels.
Right. And overall, Kunal, with regards to where the demand in the Indian market is concerned, I think I was reading a report which almost indicated that in terms of demand, we are at a 30-year low. And if you talk about the imports as well, between April 2019 to April 2020, we spent almost around $28 billion in terms of importing gold, which is almost a 14% drop from the previous year. Now, the main drivers in terms of India is one, as an investment. Secondly, in terms of weddings, where it's given to the daughters, relatives, friends as gifts. But more than 50% of India's gold demand actually originates from weddings. Now, a lot of theories playing on this front. What's the sense that you have on the demand front, which in turn could have an impact on prices?
So yeah, India's demand. Like to elaborate. So 1,000 tons of demand generally used to come from India, which is right now standing at 300 to 400 tons, and because of the COVID, it can that number should be somewhere at 200 to 150.
Hmm.
But the fact is that once the economy starts opening up, gradually we will see sharp rebound in demand post. That is going to happen post July August when the actual wedding season begins. So already right now we are in the lag season, monsoon season. So we are not going to see a robust demand of gold and silver,
Hmm.
but I think from the month of when the Diwali starts, at that time onwards, the demand is expected to pick up. So I'm not expecting any sharp up move in the demand. Pent up demand will come for this 1 month, but
Hmm.
not major upside in the demand.
Right. And any strategies that you would want to recommend for the day?
Yeah, like I recommended for 46,300 good levels to go along for the upside target of 46,850 to 900. Not expecting any major upside from that. This is just a bounce back of 2,000 rupees
Hmm.
correction what we saw, and we have been recommending to correct sell gold, and in line with that gold prices have gone down, but now I'm not expecting any major upside, just 46,900.
Okay. And apart from gold as well as crude, any other strategies?
Yeah, base metals. I think there was a question also on base metals by Anup. Base metals in copper, there has been positive development which is happening. In copper, the Shanghai stocks are continuously going down, so that is indication of a bullish trend. So 440 was my target. Already it has been achieved. So 434, 435 again. You can go long in copper. 438, 439 again go short. Again book the profit. Not very bullish because it is already priced in a lot of positive. 440 onwards, I am not very bullish on copper. Maximum 442, not above that. So from those levels, you can definitely, Anup, you can go short. But before that, I think buy it decline. So 434, 435 you can buy, 430 keep a stop loss, and 439 again you can sell. So copper is looking relatively better. Rest the other metals we can see some bit of profit taking. We've seen continuous rally in most of them. So nickel 980 you can go short, and you can expect prices to decline and test levels of 965 to 960. You can also expect zinc prices to go down, 165 good levels to go short, 162 to 160, 150, 166.50 should be the stop loss for the same. So other metals look little weak, and we are going to see some more profit taking in other base metals.
Right. And anything on natural gas? That's the other question.
Yeah, so I still wonder why people continuously track this commodity, but the fact remains is the fundamental of natural gas is definitely weak. We are not going to see any meaningful recovery in the natural gas prices. I'm
Hmm.
not bullish. 140 good levels to go short, 135 to 134 levels you can see in a day or two, and 143 should be the stop loss. So not bullish on natural gas.
Right, so that's the view coming in with regards to natural gas as well as base metals. I don't think so there are any more questions that are pouring in. But thank you, Kunal. Thank you for these insights with regards to crude as well as coal, because these two are the major hot topics that everyone's really talking about right now and that everyone really wants to understand. But we will come back to you for more strategies. Thank you, everyone, for joining in.